Hello, grade 12s. Welcome back. Just before the ad break, we were looking at the production method, and we had a discussion around the primary, secondary, and tertiary sectors. And we said that, however, we cannot just merely add up all the market values of all outputs of all participants because such a calculation will amount to double counting. So what do we do? So by subtracting the intermediate goods from final goods, we find the value that was added by each sector, because it's important when reporting on economic activity that you can look at individual sectors and see how they are performing. Because, you know, for a particular report, we might just want to know how the primary sector is doing. How's our mining and fishing industry? And because we've been dealing with all sorts of things, what happened in Marikana, what happened or what's currently happening with the drought and all that. So all those things will have an impact on how we report on the primary sector. So you can't just look at an inclusive reporting structure, but you should be able to look at individual sectors and report on their individual performance on a yearly basis. So to get clarity on this, we will then subtract our intermediate goods from the final goods in order to get the value that was added by each sector. So that's another important point that we need to consider. Okay, so let's have a look at our diagram. It's good to see some visuals over here. So we've got the primary sector over here, that's the secondary sector, and the tertiary sector. And then obviously you've got the different years, because when you study economics, it's always important that you do a comparison of some sort in order to see whether we are improving or things are actually getting worse, so that we can apply corrective measures to improve our economy. So this is useful information that's taken from the South African Reserve Bank on their quarterly bulletin. I did say earlier on that they are very keen to supply schools with this useful information. All right, so you get let's look at 2005, for example. Okay, so that was from the primary sector, that's the secondary sector, and then that's the tertiary sector. Okay, so we add it all up, and then we get our gross value added at basic prices. Then we say plus, so we say plus, I'm just going to use a different color. All right, so we say plus the taxes on products and then less subsidies on products as well. Okay, so we add the different sectors, primary, secondary, and tertiary. That will give us the gross value added at basic prices, plus the taxes on products, and then less subsidies on products. And then that will give us our gross domestic product at market price. Okay, so that's not quite a difficult calculation, pretty straightforward, but I'm going to go over it once more so that we are all clear on this one, and then should we be asked to do this calculation, then we can all be comfortable. So we look at the contribution of the primary sector, the secondary sector, and the tertiary sector. We add all that up, and then that gives us the gross value at basic prices. Then we plus the taxes on products, and then we minus or less subsidies on products, and then that will give us the gross domestic product at market prices. And then we move on to the income method, where the gross domestic income adds together the income earned by the owners of the factors of production. So remember, looking at the circular flow, the households are the one that supply the factors of production to the firms and to the producers as well. So let's have a look at this table. So you've got the national income, or the gross value added at factor cost. So we've got the compensation of employees, the net operating surplus, consumption of fixed capital. All of that will give us our gross value added at factor cost. other taxes on production, less other subsidies on production, and then that gives us our gross value added at basic prices, and then taxes on products, less subsidies on products, and then that gives us our gross domestic product at market prices. Okay, so it's important to understand what goes in the national income or in the gross value added at factor cost. Okay, so for us, it's important that we are aware of this because I've seen quite some nice questions in the past papers regarding the gross value added at factor cost. So let's look at the compensation of employees, which was our first point. Okay, so just going back, so that's the compensation of the employees that I'm referring to. So I'm going to move on back to my first slide or to my next slide. So that's the compensation of employees, which consists mainly of gross salaries and wages. So we know that for labor, as a factor input, it gives you salaries and also wages. And then the net operating surplus includes mainly the total value of goods and services that are produced, less cost, and cost has three elements. Let's have a look. Cost of the intermediate goods and services, cost of remuneration of employees, and the cost of consumption of fixed capital. Okay, so don't forget to be aware of these three elements because they are also very important when we look at the costing. Moving on to our next point, so the net operating surplus show profits and surpluses before taxation. Okay, so this does not include tax, it's just before we get taxed. Hence we say it's your gross salary that we focus on, okay, not your net. Your net will be after all the deductions and the tax has been taken out. So this is the amount that you earn before the taxation takes place. Then moving on to the expenditure method. So here the GDP measures total expenditure of final goods and services produced within the borders of a country. And let's put our table over here. So we've got the final consumption expenditure by households over here, and then the final consumption expenditure by government, and the gross capital formation. Then we've got the residual items over here as well. And then that gives us, so those we less or we minus. And then here we've got the gross expenditure, which is our amount over here. And then exports of goods and services, and then the imports of goods and services. Okay, because remember, we are dealing with an open economy, and therefore we are going to have the imports and the exports taking place in this market as well. Okay, so that's that. And then the whole concept of real GDP versus nominal GDP. So in order to compare the GDP of one year with that of another year, the nominal, which is the current GDP, must be changed to real or constant GDP. The influence of price changes on the total figures must be taken into account when comparing the GDP of one year with that of another, because this is also important. Remember, we're looking at economic activity and we want to establish whether there's been more or less economic activity taking place. And like I said earlier on, these comparisons are very important in order for us to note and be aware of whether there's been an improvement or whether things are getting worse. So we need to compare the current GDP to that of a a previous year. And then the inflation will usually be used as a deflator. So the deflator usually is the inflation when we are looking at the calculation. Okay, so that is for the real GDP, which equals to the nominal, and then we times that, and that will be the inflation, which will be used as a deflator in this current situation. All right, then just to sum up our lesson and what we have learned today in today's lesson, we looked at the definition of what a market is. We said it's any contact or communication between actual and potential buyers and actual and potential sellers of goods and services. Okay, so we said a market is a place where buyers meet with sellers and they exchange goods and services. But sometimes it's important to know that you have actual sellers, the people that are going to buy the product, which is guaranteed. And then you have those people that might buy the product, which we can't overlook because we want them to purchase our product. Also, we looked at the factor market, a market where factors of productions are traded, for example, the labor market, and the reward for the labor market will be wages or salaries. Okay, so that's the labor market. Okay, but it forms part of the factor market, which is basically your 4 factors of production. Okay, all right. We also learned about the capital market. So I'm just going to pull my screen down. Okay, so we learned about the capital market, and we said this is the market for long-term financial instruments, for example, bonds and shares. Okay, so when we talk of long-term financial instruments or indicators, we're looking at bonds and shares as well. So we will find that in the capital market. And then we said that the JSE plays a very important role in this regard. So it's the institution that will play an important role in this. We also learned about the financial market, those financial institutions that are not directly involved in the production of goods and services, for example, banks, insurance companies, pension funds, and the JSE. Okay, so we know that the banking sector is very important in the economy, the insurance companies, pension funds, because they also are used as a form of investment, and also the JSE when it comes to long-term investments. Then we also learned about the goods market, a market where goods and services are traded, for example, cars, milk, also known as the product market. Okay, so the focus here is the goods and services. And remember, we said when we refer to products, we are actually referring to the goods and services. And then also we chatted about the money market. So we said it also plays a very important role. It's a short-term and very short-term market for savings and loans. So if households want to save or they want to access loans, then they will approach the money market for that. And that's a wrap of today's lesson. I trust you found the lesson quite useful as you prepare for your examinations. Remember, economics is a very practical subject where we look at issues that happen around us at all times. So it's important to be up to date or to keep up with the trends and developments in terms of the world of economics, and also the changes that are happening in our economy on a daily basis. So remember to watch the news, read the newspapers, read the publications that are available, but also chat to your mates as well. You know, you might pick up a thing or two in your discussions. So that's a wrap from us, and we trust that you've enjoyed today's lesson. We'll see you soon. It's a wrap from me. Bye-bye.